Good afternoon, everyone, and welcome to our next presentation. Our next presenting company is UEX Corp, and presenting on behalf of the company is Roger Lemaitre and Evelyn Abbott. Roger, go ahead.
Well, thank you. I'd like to thank Red Cloud for hosting this event. Definitely a really cool format, and hopefully everyone who's here gets getting great value out of it. I know from a company point of view, it's worked out fantastically. I'd love to talk to you a little bit about our company, UEX. We are a unique uranium investment that not any other opportunity out there in the junior space represents. We have a unique space in that. And we also dabble a little bit in the cobalt space as well. We will be making some forward-looking statements, so please keep that in mind as we move forward. 6 key things about UEX. We have an immensely large portfolio in the world's premier junior explorationable district, the Athabasca Basin. Not only is it large, it's a high-quality portfolio because we were there. We were founded in 2001, so we picked up our land package prior to the last cycle of the uranium upswing. So we do have an excellent, high-quality portfolio. Backstopped also by one of the largest resources held by juniors. We have just under 100 million pounds in 10 uranium deposits that some of them will be ready to move forward in the next upswing. That being said, though, our growth potential through exploration is pretty intense, low risk type opportunities. We have intellectual knowledge on one of the most unique styles of cobalt deposits in the world, the unconformity Athabasca cobalt deposit, which nobody else has knowledge of, and we have one of the very first one of these in our portfolio. While you can argue that uranium is either overvalued or undervalued compared to our peers, we have a lot more room to move on our re-rating potential. And our team at all levels, be it management, board, or in the field, been there, done that, found things. I will go very briefly into uranium markets. It's been a long slog for uranium companies and investors since 2001, the Fukushima event. But as things have been changing since Fukushima, the key thing going forward is there hasn't really been a uranium market because most buyers have been covered by long-term contracts and most suppliers have been selling into long-term contracts. And as those contracts have started to roll over in the last year and a bit, things are starting to change. But unfortunately for suppliers in the space, developments south of the border when it comes to the Section 232 petition, the Nuclear Fuels Working Group, and most recently the Russian Suspension Agreement have put global uranium buyers in a bit of a bind over the last few years. Though those events have been dealt with, and now doesn't appear to be any more political intervention. COVID has brought forward a supply deficit that was forecast to happen a year or two out into the future, out to today. A huge supply deficit happening. But meanwhile, the price of uranium doesn't seem to be following this supply deficit. We see spot prices today at $29.60, your term prices being far below the cost to supply new pounds at $42. And if every supplier in the world is losing money, this can't happen indefinitely, so something has to change. Because there's massive growth happening in the space, we're seeing 25% of the world's fleet essentially being replenished through new construction. And supplier or utilities are uncovered here in the very near future for a substantial amount of pounds. They will have to return to contracting here shortly. What we feel at UX is that we're going to see in the fourth quarter here, either it's going to, with supply coming back online through temporary closures due to COVID, the question will be whether the utilities can find pounds on the spot market for cheap or not. And I think right now the supply is extraordinarily tight. And if they can't find it, they'll start to move back into realistic contracting terms. And that will have a very positive effect on the market. Our company here, trading, last week's been a tough one for most uranium companies. We've been bouncing between $55 and $70 million here since the spike in early April. As market cap, we have 2.4 million in the bank, of which almost all of that is hard dollars. So we're well positioned to make it through to the end of next year. Cameco, our founding shareholder, remains the largest shareholder. And our founding CEO, Steve Sorensen, is also one of the largest shareholders of the company. Our advantage is we're all Athabasca on our location. All our projects are in the Athabasca Basin, but also in the key parts of the Athabasca Basin, right next to existing operations. Experience, our team at all levels has been there and done that. Our portfolio provides investors with a range of possibilities from grassroots to mid-stage to actually development-ready projects, and nobody else can really do that. And we have unique knowledge. Basement-hosted deposits are certainly our strength for uranium, but we also know something about cobalt deposits in the Athabasca, and we see the Athabasca as an emerging cobalt district as well. And we have the unique knowledge of how to find those. Our team expertise here, our board members span everything from CAs to investment bankers to experienced technical people on the project geologist level, our project uranium exploration level. Evelyn and I have been in the junior space for many, many years, with a long experience of running junior companies or finding uranium deposits and leading teams that find uranium deposits around the world. Probably, though, the most proud thing I have to say about our team is our team actually in the field. We have 275 million pounds of miningable discoveries under our belt that have been put in mine plans, plus the new cobalt deposits. This team knows how to find things. We may not be a large team. We may not have the most years of experience compared on a cumulative basis, but this team finds things, and they find things that are mineable. Our value proposition to shareholders is a little bit different than most you'll see out there. Right now, especially if you're focused in the Athabasca Basin, you kind of have two choices. You can lean towards the development production companies like your NextGens and your Camecos, and you can lean towards your grassroots companies. And there's advantages and disadvantages to both. Your development production groups, they have pounds in the ground. They're moving forward, either producing or about to be producing uranium, and they'll move up and down with the price of uranium. And some sort of risk factor tied to it, and they're still risky, but relatively less risky investments compared to your grassroots companies, which you got to sit there and go, okay, if they find something, they can become the next market darling. The problem is which one, because you have a plethora to choose from. With UEX and our large portfolio of projects and land and our existing uranium deposit and resource base, we will move up and down with the price of uranium as well. And we have a large portfolio of projects that spans from one end to the other of the spectrum. But where we shine is right in the middle here with this mid-stage and resource level projects, where we have 6-7 projects here that have existing mineralization that's not closed off, intersections that haven't been closed off, or all sorts of smoke that you see around deposits that haven't been closed off. And each one of these projects has more than one of these in their portfolio. So what that exposes our investors to is, we have projects that can move towards development when the market calls for them. You're going to be leveraged to the pound price of uranium, but you have lower risk upside, new growth potential through exploration. And that's something that's pretty unique to our company. And you want to be in that as an investor, you want to be in that new deposit or new discovery company, because new deposit discoveries of companies have always outperformed the development production companies, regardless of the cycle of uranium in, whether it's us back in the early 2000s, when the price was screaming up an upward trajectory, we outperformed the producer developer. Hathor did the same thing during around Fukushima, and NextGen's done the same thing versus Cameco in a really tough market. If you're willing to take on an extra bit of risk, you want to be leveraged towards the company that can make that new discovery, and that's where we shine, because we have lower risk portfolio of new discovery opportunities out there. So with that said, we have 19 projects with them, which is quite a lot, and we have a lot of grassroots projects that we would like to find partners to help us move forward with. We focus on our core 4 projects, for the first of all being Christie Lake, right next door to McArthur River, on strike, and host with the same structure to host all the pounds at McArthur River. We currently have 3 deposit discoveries on there that total 20 million pounds, and while we know that's not big enough to form a deposit, we also know that these deposits tend to occur in clusters. And this particular summer, we've just been following along that trend and found another area that has all the smoke that you expect to see around a deposit area in that orange area there at North Aurora. And we'll be doing some more work here in 2021 to be able to prove whether that area has a deposit in it or not. At Shea Creek on the west side, we were the first of the new west side discoveries bordering up on the Clough Lake deposit. We have the Shea Creek deposit, which has 95 million pounds of resources at an average grade of about 1.5%. What was intriguing to us, we were partners with Orano on this, and this project has been sitting idle only because of the challenges that Orano's had financially since the GFC and Fukushima events. But what we noticed about Shea Creek, and using our knowledge, we spent a lot of time in the last year looking through and learning about our deposits. This is a 3D rendering of the deposits, red being classic unconformity deposits, blue being the basement-hosted roots of those deposits. And what we see is most of the pounds at Shea Creek are hosted in the basement at Kiena. And yet most of the deposits at Kiena, those target areas, haven't been tested along the entire strike length of this 3-kilometer mineralized trend where we have our resource base. And so we believe that coming back with our partner Orano, we'll be able to look for and grow the resource here substantially from the $95 million pound base that we have today by looking for cross-cutting faults that host the Kiena deposit and the bulk of the pounds today. Our development-ready project is Horseshoe Ravens, right next door to the Rabbit Lake Mill. Literally, the road and the power line cross over the deposit itself. We have a smaller deposit here of 37 million pounds, but it's that starts at 50 meters from surface, can be mined conventionally without having to put potential water protection measures in place or freezing into place or radiation protection measures, intense radiation protection measures in place. So this project, if it was anywhere else in the world, would be considered a relatively high grade and attractive project, but it's not as sexy as, say, some of the really big high grade deposits in the basin. But this will be a really good cash flowing opportunity in the future when the market calls for more pounds. At Hidden Bay, although land surrounds that, borders up against the Rabbit Lake operation of Cameco and Orano's McLean Lake Mill, we have a huge portfolio of opportunities here, 14 sort of opportunities where classic exploration work's been done to look for deposits within a little blue box in the top middle inset there, classic unconformity cigar-like type deposits. We know that the current deposits being found in the basement are found down dip and in the hanging wall here. What we have is an inventory of targets that tell us there's smoke in that little box. It tells us we should be looking in the basement. And we haven't yet been testing a lot of those, but things in our portfolio would be things like our McLean South target, where we literally border up against the side of an open pit, and we have sniffs of mineralization we can put together into an Eagle Point style scenario. Could have substantial pounds. And that little blue box in the dead center of the figure there, that's the footprint of 80 million pounds at Eagle Point nearby. We have 4 or 5 other targets to follow up on to look for the Eagle Point style mineralization here that sits in our portfolio. We also dabble a little bit in cobalt space. We have Canada's only primary cobalt deposit on the south end of our highland holdings in the eastern Athabasca Basin. This is a first-of-a-kind deposit. Well, we know it's not quite big enough to go right yet. We have satellite opportunities to explore around to grow the resource base here. We believe that the Athabasca Basin can be a cobalt district as well as a uranium district, and we have the intellectual knowledge with our discovery here to be able to move that forward. Our plan is to monetize this asset for our existing shareholders, and we're just waiting for the right appropriate time for that balance for shareholders is optimal. And West Bear is interesting because it's some of the highest grade intersections in the world came out of this deposit in 2018 and 2019 in the cobalt space. So just to summarize things up a little bit here, we're a unique uranium investment out there. We're not like some of the other companies you see out there that are either development stories or grassroots stories. We have development potential. We're leveraged to the price of uranium, but we have that low risk, mid-staged resource level growth potential that nobody else has. We're essentially a portfolio company unto itself. And with that in mind, just to compare us to some other companies in the space, both in the Athabasca and outside the Athabasca, we have, if you look at on the chart there, we're blue. The blue chart there, we're well below the average enterprise value per pound in the ground. And so there's a lot more room for us to grow, especially with new discoveries compared to some of our peer companies. You can argue whether the space itself is high or low in terms of its relative valuation, but compared to our peers, we definitely have room to move. And with that, I'll turn it back to you, Derek, to throw in any questions anybody might have.
Absolutely. Thank you very much, Roger. It's a great overview of UEX. Maybe let's start with you have a great suite of projects. Looking ahead, where is UEX's focus on the work you're going to do going forward, and which projects do you expect to be sort of working in 2021?
So in 2021, we expect that we'll be working at Christie Lake, following up the targets just north of the existing mineralization. We have a couple of targets at Hidden Bay that we'd like to see followed up on, but that's making the assumption that we can't get things regoing with our partner at Shea Creek. And if that happens, our focus will shift towards Shea Creek.
Right. Obviously, you have a little bit of a unique look into Orano, one of the bigger uranium producers in the world, that not everyone sees. Do you see them coming back to Shea Creek next year? And do you think that's possible?
Well, I definitely think it's possible. I think and when you look at their pipeline of opportunities around the world, they're relatively limited in things that they can control and develop on their own dime and on their own time. And I think that's where Shea Creek really comes into play for them. Between the two of us, we can control what happens there. Some of their other projects, they're minority stakeholders in, for example, Cigar Lake Phase 2, or they have these particular challenges that they can't control whether or not those development decisions are made. And their pipeline out a decade from now is challenged with depletion in Niger and Cigar as well. So they have some things they have to do to keep their production at the current rate. And Shea Creek would be ranked pretty high in their portfolio.
Yeah, their assets in Niger are coming offline over the next few years, and I think that's good for the uranium story in general. Probably also good for the development plans for UEX as you move forward Shea Creek. Obviously, you showed a very unique slide, and it's part of the reason that we're excited about the uranium space is that there's a lot of opportunity in uranium for parabolic moves in share price, and that it's something that not all companies can do and deliver. Maybe talk a little bit about, because UEX is unique. You potentially have the ability to do it with the uranium price movement, but also with your exploration portfolio. So talk about how the company's been constructed that way, and how investors will see that play out in particular as the cycle turns.
I think with a portfolio of opportunities that span the range there, what it does is allows the company to be flexible as the market conditions make things more or less palatable in certain segments of the portfolio. So, for example, we don't believe right now that we know that our uranium opportunities at the development stage are in that sort of $45 break-even price. So we know that we can push forward and develop that today, but it would be detrimental to shareholders on a dilution basis. So we'll grow our resource base with that low-risk portfolio. That when the market gets a little bit hotter, we have a large grassroots portfolio. And while we could technically work more of those, we'll probably focus on our key 4 or 5 assets, and we'll have the ability to farm those out to companies that are looking for excellent land packages in the Athabasca Basin. So we leverage out more work through potential new discoveries with new partners. And then if the price is high enough to support development, we have that opportunity as well. So it gives us some flexibility to shift the strategy a little bit one way or the other, depending where the market does go, to the benefit, and that backs benefit of shareholders.
Right. And now, obviously, we saw the uranium show that in the UEX share price, and it was across the space. We saw as the spot price ran up earlier this year, we saw equities move. Did you see interest from companies looking to sort of acquire some of your more grassroots projects, or is that still, are we still a bit away from that part of the cycle yet?
I think we're at the beginning of that part of the cycle. To be very honest, right. I think we haven't seen too many new companies come into the basin yet, and I think that the existing companies the smaller number of existing ones that are out here have some good assets that they're going to want to push forward to as well. Our view with the grassroots portfolio that costs us nothing to hold on to, we don't have any real dire need to sustain it by putting money into the ground just yet. Right. There's no sense doing that until there's some security for companies that come in that can raise the money to get the work done. So we can make a deal, 100 deals tomorrow. If those groups can't finance things, then that's a bit of a challenge. And why do that kind of work just yet? Because it's not sustainable. We believe that those things have to be win-win for everybody. So I think what we are seeing, though, is people starting to knock on our door over the last month or two with an eye to the sort of macros in the space, saying that we think this is going to be something we want to do. Can we talk? And so we're just starting to see that. We're seeing that in investor space as well. More investors calling us up out of the blue, unsolicited, saying, "Hey, we'd like to know more about what you're doing, what possibilities are out there." So yeah, I think interest is definitely starting to gain momentum, especially compared to where it was this time last year.
Yeah, this uranium has been a challenge space, and you mentioned the over the last probably 10 years, not just the last year, but I think we are seeing. I'm of the view where there's a light at the end of the tunnel, and as you mentioned, with the policy hurdles cleared in the U.S., that large group of buyers of uranium are going to come back to the market, and I think, as we noted in our research, we think UEX is one of the companies that's positioned to take advantage of that with leverage both with the pounds in the ground and with the opportunity for shareholders to benefit from the exploration upside that you have in the portfolio. Mm-hmm. So with that, we are out of time. For those thank you, Roger and Evelyn, for presenting. Thank you to those who joined us on the line. For those of you who are going over the next presentation, you can do that by clicking on the arrow on the bottom left-hand corner of your screen. Thank you again.